Hey, I want to talk about a couple of interesting things that caught my eye. Bitcoin is, well, not behaving as you would think it should behave in a down cycle, and whilst the risk environment is relatively negative. But it's for the simple reason that Bitcoin, right now, what we have on this day, seemingly innocuous, average day, we've shifted into neutral trend, positive trade, and neutral tail. The first such signal since, once again, we've went short on it here. This amplifies my belief that we are nearing the end of the down cycle for the Bitcoin, and the relative strength in it is not surprising, not at all. What I am painfully aware that during these shifts, these monumental shifts from the down cycle to the upward cycle, every single time when the signal first time during that period turned positive, we've had a false signal triggered, some sort of a flash out, some sort of a exogenous event that ultimately triggers signal negative again, and then it flips positive, and then there it is. We have positive tail, positive trend, and this is the beginning of the new cycle for Bitcoin. And it was quite evident in even on the flip side of it, from the shift of the positive trend and tail into negative. It would happen right here. We've broke trend in here, and by all means, this was the first. No, not the first. This was the second time. This was the same thing happened here, but the cycle was not over, and we were saying the cycle was not over. And during that exogenous event of tariff shock, Bitcoin behaved very resilient. It showed itself very resilient relative to everything else. Everything was falling. Bitcoin was holding its own very well, and we've said, well, Bitcoin is the first thing you want to buy here. Same thing happened here, but on the other side, this was a very unusual type of price action from here. This is what you call flush out. If you invert the scale, you shift into negative trend, and by all means, you should continue from here higher, meaning lower, but we ultimately taken out the all-time highs again, and then we shifted and went lower subsequently. Same thing happened here. This was, if you look at this was this shift into the positive trend, and I was saying, well, this looks like the end of it. This, by all means, shifts us into positive tail, positive trend, and positive trade, so you should be buying that. Obviously, after that FTX failed, we've had a negative, essentially you would classify this as a negative signal, as a false signal, and then ultimately, almost at the same level as it shifted the previous time, we've shifted into positive trend tail again, and on we went. Same thing happened here. This was the positive trend, positive tail, and everything. Then the exogenous event happened, we went down significantly, and then the same thing happened. So every single shifts in tail, in trend, every single shifts in this key point of the magnitude change from the down cycle, tail down cycle, to the tail up cycle is accompanied by the false signal. Maybe this is going to be the same thing again, because by all means, once again, we are, as we've been saying to short this bounce, we've been saying to short this was a shift into positive trend, and we've been saying this leads to nowhere. And what we have now is we have a massive move lower, but we did not break tail. So we are building the base in here, and over the next couple of months, we will be continuing building the base, and then some sort of shock will happen. Maybe not, but generally this is where you would want to start accumulating the position for the next upcycle in a month, 2 or so. And I would not be surprised to see a down move into 50,000, a quick down move into 50,000, and this is it. This is the end of the cycle, and we're maybe continuing into the all-time highs over the upcoming years. Maybe not. I don't know. But what I know is, we've bought Bitcoin in here on this day, since this is a signal you cannot ignore. and yeah, it proves to be resilient. I don't know how far it has to go. I don't think this was the end. This was the end of this once again downward cycle, because I am still expecting that sort of a flash out to happen. But we shall see. You cannot ignore this type of signal though, and you should follow it. So yes, we've bought it. What we are looking for is we are looking to build for the upcoming cycle the position hood. Hood as a we are treating this as a 70% positive beta to correlation to Bitcoin itself, and 30, 35, 40% positive correlation to beta to SPY. And it turned tail much earlier than Bitcoin did. This was the day it turned tail. So we are positive tail, positive trend, and yeah, I would start accumulating position in Bitcoin, but I would accumulate more position in Hood itself, expecting it to outperform in the upcoming cycle. So yeah, this is the trend in Hood. Any fall back into the trend is meant to be bought into. From the perspective of the upcoming risks, what I see is the inconsistency. A very peculiar thing that is going on right now is we have a very cold CPI coming in, and for all we know, this was the peak of the CPI for the upcoming year, I suppose. And during the next 6, 7, 8, 9, 10 months, we're going to be falling down below 2%. If that is, oil doesn't spike to 150, and oil will not spike to 150. What we have now is a trending retracement in oil, and you should be selling this. We've been saying this all over again. We've sold this in here. Then we were expecting the bounce from the fractal dimension in here in the OVX oil volatility. We closed the gap in here, came into the key level, and volatility fallen, and big short position was built, and this is your just shorts. Obviously, it comes on the back of some sort of news. News don't really matter in here. Yes, he's doing whatever he's doing, but ultimately what you should be doing is selling trending. It will create a trending lower high, just as it did during the previous cycle. As you can see, these gyrations in price, massive like this, massive retracement, trending retracement, which ultimately is you should be selling into. So what you should be doing in here, and what will be doing, is going into XOM, going into things, the proxy of oil, and selling these things, picking up the negative delta via short call spreads, because the volatility is so much elevated, and I don't see us really breaking this high and shifting into positive tail again. It's well, this is what the signal says anyway, so we trust the signal. That's at the least what we can do. What is very, very peculiar and interesting is the fact that we have this very cool CPI, and all of the smart people are saying that this is the peak, and everybody knows, like, markets should know that this is the peak, but either Fed is not going to be listening and raising rates into that, I don't know, but market is unwilling to price the peak in inflation, just unwilling to price the peak in inflation, for the simple reason that usually during these types of pivotal moments and downside surprises on CPI, what we have is at least breaking trade, at least in things that are highly correlated to such things as CPI and inflation outlook, right? Like the 2-year, 10-year, the whole rate complex, the gold, therefore, so on and so forth. And what we have is a stubbornly positive price action in rates. And we know that the next CPI print is also going to be subsequently substantial deceleration. And it's still 10-year. Just on the surprise in CPI was monumental. It was historic. It was very, very, very large on the downside. And that's what we get? As test of trade? And mind you, 10-year and 30-year are positive trend and positive tail and everything. How bizarre it would be that inflation is going to be falling and completely falling, like decelerating significantly, whilst the 30-year yield is breaking out of this multi-year consolidation into like 5.5%, 6%. What might that be on the back of is the expanding term premium. For the simple reason that what we have, and the biggest moves in markets happened on the back of policy changes, policy decisions. Essentially, Trump. You can sum it up with one word, right? Trump invades Iran, starts the war with Iran, and this creates a dynamic that impacts every single thing in macro, every single asset, everything. Tariffs creates a dynamic that impacts every single asset. So politics, Trump. What we have coming is the midterm elections, which we know, well, they never mattered over the course of how many years. Right now, this thing is going to be contested. I would not be surprised to see shootings, sparks of revolution, trying to consolidate the power through the illegal means, blah blah blah. It will be happening for certain. If he does not succeed in keeping the house, keeping the power, using legal means, but just circumnavigating them and amending them, he will resort to everything. Illegal means everything and anything. So we know this is going to be big. Maybe market is pricing that in. And by all means, like, this should be negative for the currency. When democracy becomes dictatorship, it should be negative. It will create volatility in the bond market for sure. Left tail volatility, meaning yields higher. Ultimately, even if US becomes outright dictatorship, it will not matter to the markets, honestly. It just doesn't matter. It will be good for indices. It will be good for indices because all that means is oligarchy dictatorship taking place, and they're going to be sucking all of the money that they can into their own pockets. We know how we've seen this so many times. It's gonna mean fuck the people and let's go the stock markets in the simplest terms possible. Yes, things like Tesla and everything, this is going to be positive for their returns, kind of intuitively. It will certainly create volatility in the bond market. So maybe this is what bond market is sniffing out. This relentless expansion in term premium, which will take bond yields on the 10-year, should take bond yields on the 10-year upwards of 5.5%. And that's, it's certainly a move out of this consolidation. Yes, can you imagine? We have inflation turning down on a trend and tail basis. We have it. We know. So what inflation is doing right now, this was COVID, this was after that. What we have is the move in Iran and problems in Iran's inflation scare, and now this is what inflation is going to do. And during that time period, and we are right here, these things, which are usually forward-looking, these things, however you look at them, they are forward-looking, they are smart. A positive tail, positive trend. We were right here a couple of weeks ago, and on this weekend, wait a minute, that makes sense. Yeah, sure. We broke trend. We were starting to put on the longs on proxies of the lower rates. We were starting to be looking at things that are anti-correlated to lower rates. Yeah, but then we broke trend again, despite all of this. And now we're seeing here, and wait a minute. Well, the only thing that can push yields higher in the face of falling inflation, significantly falling inflation, is expansion in term premium. And what can it come on the back of is, political turmoil, like serious political turmoil, things that we haven't seen in ages in the US. So yeah, that's what's coming for sure. And 2-year is not willing to pricing change, even trade on such a. So this is very surprising. Gold. I would love to see gold behaving at least some sort of positively in here, but no, it's just dead in the water. And if term premium expands in the bond market, and they are, things are happening as I'm describing this, isn't gold supposed to be performing very well? I don't know. It should, by all means, but there is no signal whatsoever. This is dead in the water. You don't touch it. At least for now. Oil, once again, I've said my 2 cents. What we are looking for here is a slow grind higher, and then by all means we are going to be putting on call spreads like 155, 160 short call spreads and XOM shorting oil here. Dixie, neutral trend, positive. Well, it's positive trend, but it's neutral. We've rejected this intermediate lower high on a trading basis. And I don't know. I just don't know. I do not understand what Dixie is doing. Well, I understand from the perspective of the signal, but I cannot describe to you a comfortable narrative in which to wrap these things up. It's just, well, I don't believe there is nothing to do in here. Like, there is nothing to do in here. You don't want to be long it. You don't want to be short it. I don't want to be anything. I want to be long Bitcoin, which is, once again, this is the first time that I've said it since this week. First time, like, this is it. We are very close on the tail perspective. Very close meaning months. I'm talking about months. We can dance around here for months still without clear exit. This is the tail. Any down move in here, I am willing to buy, essentially. Any down move in hood, once again, I'm also willing to buy. So any exogenous of anything that is happening, anything that pushes us into the trend, anything that pushes us into the, well, the tail is so far away. This is your tail. The tail is into the tail. You should be buying that, and we will be buying that. Hype is a very, very much interesting thing. Another thing that I am looking to pick up going into the upcoming cycle, but what will happen before the upcoming cycle is a horrendous volatility coming into the midterm elections and whatever that happens with rates and all of that. So I don't believe we will see a decisive actions or signals coming from the all asset markets, assets during the summertime. I don't believe that. We're going to see some scares left to right, but nothing to be basing your tail big positions, conviction positions on. URA, unfortunately dead in the water. Gold, all metals are dead. You don't want to be touching them, except copper. Copper is, well, it does what copper does. You should be just selling puts on it and just moves on trending basis higher, trending move lower, again, move lower, again. This is what it's going to be doing. Going to be testing trade, moving higher, testing trend, moving. So this is it. Well, copper is not going to be doing this. It's just going to be doing, again, what we've seen. So yeah, the only thing you can really do on copper is selling puts on it. COPEX, meaning the relative exposure in copper miners, well, this move has passed and this will continue. It's unlikely that we're going to get the repeat of this, at least not in the near to medium term. What I'm looking for is certainly putting on some sort of a big short position in rates. Big short position in rates. I'm not meaning long end. The only way, once again, that I can comfortably explain this is expansion in term premium and these things, despite falling CPI, as we are currently observing. I do not remember over the past 10 years that on a day like this, on a CPI like this, I think these things behaving like they are doing now, right here. And by all means, if I just close my eyes, this thing is going higher. Like, we've been saying this for years, and this is the type of the consolidation which you break out of. Like, this reminds me very much of gold. Like, this type of a consolidation, you break out of it. And we have the upcoming catalyst, so we shall see. We shall see how they're going to manage it. What we know for certain, though, is the debt pile in US is unmanageable, and they will be lowering rates at the short end in order to refinance the deficit. There is no other way possible. So yeah, this move just offers an opportunity. Maybe it's going to happen after, but we shall see how market describes it. You would think that the shift in trend and tail in the short end and in the rates overall should happen on the back of inflation shifting and peaking, right? Which we are seeing now, and not necessarily. So let's wait and see until, well, until it happens. And when it happens, when ZT finally breaks trend into the positive and tail into the positive, I believe this is the type of thing that you want to just get into big time. You really want to get into it because in by the end of 2027, if what Trump wins midterm elections, and he will win somehow, some way, I don't know. The only way Trump leaves office, the only way Trump loses power over the U.S. is via revolution, meaning people are either gonna kill him or, well, he's gonna kill them. It's as simple as that. The tale as old as times. And I don't believe and I don't see that the US and the society in the US has the sufficient anger and despair and, well, in order to do something like that, in order to really stand up to the oppression. Well, you can call it oppression, but well, we shall see. So, and when he completely takes over, which during the midterm elections he should, I don't know how he's going to do it. I do not know. I don't understand. What do you think Federal Reserve is going to be doing? They are going to be lowering rates. And by the way, inflation is going to be falling below 2%. So this motherfucker, well, by the end of 2027, US 2-year yield, is so mispriced. It's so, and we know what Warsh is doing with those committees that he's creating, the task forces. All of them on the margin are going to be dovish. So 2.5% by the end of 2027. Yeah, that's what I'm looking for here. 2.5 or below 2.5%. So we're gonna be playing this via ZQ most likely. So we shall see how it's gonna play out. But patiently waiting on this. Japanese 30-year yield, a very peculiar, interesting signal, breaking trend. First time since God knows when, honestly. Interesting, very much interesting. 10-year yield is, well, not breaking trend, but 30-year is breaking trend. I don't know, but that's okay. 10-year in Europe, 30-year in Europe, positive tail, yet negative trend, but neutral, I suppose. Nothing to do in high yield, no meaningful signal in here, and we're not gonna get a meaningful signal in here. We're gonna get some volatility this month on the FOMC meeting, but no, nothing. This no major positions to be built on. SPY just grinding, doing nothing. Maybe we're gonna get another like this episodic non-trending spike in volatility, and then again slowly drifting higher. Most of the moves this year already happened, I believe, but we shall see. There is nothing to do in indices other than just selling these puts on indices during these non-episodic spikes in volatility. DIA, RSP, equal weights are even stronger than SPY. Is there anything else to highlight? World equities are doing fine. There is no signals to be selling equities or no signal of a risk-off environment as of now. Apple is rather interesting. I don't know. We shall see. Apple is positive trend, positive trade, positive tail. We've shifted its positive trend again in here. Is this we're testing trend now, testing the all-time highs. So we've gotten our exposure to Apple via just getting into the long-term position here on a trend shift. Meta, we're looking to put on a trend shift, meta shift trend as well. Here, we're looking to getting exposure into Meta. We've shifted a trend a couple of times in Meta here. This was a shift in trend, this was a shift in trend, but ultimately we came down. I don't think that this is going to be one of those times. We have a clear catalyst, so we're going to be looking to put on exposure here. The long-term exposure, honestly, just long-term exposure. Nothing here speaks of something immediate, something that the trend is gonna persist, going to be particularly strong near term. So yeah, generally this is it. MU the cycle in AI cycle, generally AI capex cycle, a memory cycle is not over. Yes, this is the first time we're shifting trend in MU, and well, SanDisk testing trend now. SK Hynix broke trend, EWY broke trend as well. But what is interesting is NVIDIA. NVIDIA is behaving well with relative strength relative to everything else. Maybe finally getting into NVIDIA makes a lot of sense until, well, when it shifts trend. And if it does so, we will get into NVIDIA. And how I'm seeing this is there's going to be a lot of nothingness coming into the near term, into the upcoming months. Then you prepare yourself during the fall, and whatever resolution is going to happen during midterms, and resolution will happen, some sort of resolution will happen. There will be another leg up into these types of exposures, these types of stocks. All right, I think this is it. This is everything that I wanted to talk about.